around the liabilities portfolio, for the sector as such. I wanted to get a sense from you. Some of the private banks out there are sharply hiking the minimum average balance because they believe that that's the way to A, retain a higher CASA ratio, but also B, to better cross-sell products because you want high-value partnerships with your customers. Previously, bankers have pointed out that the nature of CASA has changed entirely. People are no longer interested in keeping money in their savings account for very long because there are high-yielding products now. If it's not the bank, they will go to the market and they'll make the money there. I am trying to understand from you, where do you stand in this camp? Are you somebody who believes that I need to retain maximum relationship with the customer, so I want your high-value customer base only? Or do you think that banks are an essential service and let people keep money however they want to keep?
So just first to address the macro on the deposit side, one of the beliefs I have is there are three parts to the deposit, right? CA, SA and term deposit. I think it is a term deposit which is an investment product.
Yes.
CA and SA are transactional products.
Yes.
So yes, term deposit will face competition from other wealth products. I understand that. I do not agree that CA and SA are competition from wealth products because they are transactional. In fact, if a customer trades in the stock market, his SA is better.
Correct.
Than a customer who does not, because transactions lead to CA and SA balances.
Better balances.
So I don't see a conflict with CASA, right? So term deposit, yes, but there my view is that as India, if India story has to play out in the next 10, 20, 30 years, then our $2,000 per capita hopefully has to go towards $10,000. So deposit will remain a product, and there is it is a early the person who first buys financial products.
Early introduction.
It's an early introductory product, right? So as people rise from this 2,000 to 10,000, I think there is a humongous opportunity.
Right.
And a small percentage of that 10,000, a smaller percentage of 10,000 will be bigger than a bigger percentage of the 2,000.
Sure.
Right? So I do believe that deposit will grow, may not grow at rates that are 15 and 20 or mid-teens and all that. But I think early double digits, it will continue to grow. So we have to remain there. And we as a small share of the market, I think we have to find our strategies to continue to grow rest market share. On CA and SA, I do believe that, of course, there the pressure is coming out of efficiency of the system, right? System is getting more efficient, payment systems are better, and that's what leads to lower CASA, right? Pressure on CASA, not the investment product.
Got it.
So there, I think, like I said, for example, for us, if we focus on wealth and wealth products, which I said is a means to get fee, it also enhances our SA. Right, so I don't see a conflict with these, and we have to continue to do. So, for example, our corporate CA is quite low, and we have an upside opportunity because we just launched our cash management system last month. Right, new cash management system was launched last month. So we have to create products. Cash management, online trade, and things like that, which we will create to get a CA. Coming to your minimum balance question, see, I think every bank to their own on the strategy of what they want to achieve. And all I would say is at our stage of growth and where we want to see, I think we have to play the mass affluent category, and we have said mass affluent is our focus area, and we will do products which continue to sell for mass affluent.
Even your wealth products.
Even our wealth product will be focused. Even our wealth strategy is not going to be private bank based strategy initially. We want to be focused on the mass affluent segment, and that's what our focus will be. And so we will continue to do products which are suitable for that.
All right.